Biden says the nation's banking system is safe, but Wall Street doesn't appear to be buying it.
Bank stocks tumbled today following the collapse of 2 U.S. banks since Friday. And now many are wondering, will more banks fail? Our business reporter, Justin Backover, is here with more. Justin?
Yeah, Wendy and Rob, that's right. Bank stocks are taking a beating while investors try to shore up their money and figure out if these failures signal something worse ahead. First, Silicon Valley Bank on Friday, then Signature Bank Sunday, and the federal government has announced aggressive action to contain these failures.
Thanks to the quick action of my administration over the past few days, Americans can have confidence that the banking system is safe.
The U.S. is trying to quell fear following the failure of Silicon Valley Bank Friday, the second largest collapse in U.S. history after Washington Mutual in 2008. SVB suffered an old-fashioned bank run after it sold $21 billion in Treasury securities at a $1.8 billion loss due to rapidly rising interest rates, sending depositors into panic. Economist Ahmed Rahman with Lehigh University says it's still unclear whether this is short-term illiquidity or long-term insolvency.
We don't know the interconnections, just like we didn't really know the interconnections in 2008 until after the fact.
New York-based Signature Bank became the second to fall, closing Sunday. The federal government announced it would step in to make depositors whole at both banks, even over the $250,000 FDIC insurance limit.
No losses will be borne by the taxpayers. Let me repeat that. No losses will be borne by the taxpayers.
Irregardless of what you think has led us to this point, I think now the administration has very little choice in the matter.
However, the government stresses there will be no bailout for investors.
What the Federal Reserve is going to do now is really a big issue. And already you have economists of various stripes suggesting that this is going to, at the very least, put a hold on interest rate increases.
Rahman says as of now, he doesn't see widespread panic.
As long as you have your money secured in an institution that's FDIC insured, we should take comfort.
So we'll now have to watch the actions of the Fed very closely. Less than an hour ago, it announced it would conduct a review of the supervision and regulation of Silicon Valley Bank. Results will be publicly released by May 1st. Back over to you.